Greetings and welcome back to the lesson. In this lesson, we are going to distinguish between budgeting in the private sector and public sectors. Distinction between budgeting in the private and public sectors. And the differences, candidates, between budgeting in the private sector and the public sectors is defined by their fundamental differences in objectives, their differences in funding sources, the legal nature of the budget itself, and so on. So that's very important for you to understand as we move into the distinction. You need to note that the distinctions between budgeting in the private and public sectors is defined by their fundamental differences, which could be differences in objectives, differences in revenue and accountability, differences in the nature of the budget, it could be differences in their legal nature, and so on. So the first difference is based on the objectives and focus. Objectives and focus. Now, the core difference between the private and public sector budgeting is their objectives and focus. It lies in the ultimate goal of the organization. For example, in the private sector, what is the objective of running a private company? Now, the primary objective of budgeting in a private company or in the private sector is to maximize profit and to enhance shareholder value. Therefore, the budget here becomes a management tool that is focused on maximizing revenue, on controlling costs, and also achieving targets like return on investment and so on. That is the objective of a budget in the private sector. Maximizing profit and shareholder value. But for the public sector, the purpose of a budget in the public sector is service delivery. The purpose here is to enhance service delivery. The primary objective is service delivery and ensuring compliance with legal mandates and public policy. So the budget here is focused on justifying expenditure necessary to provide mandated services like healthcare, defense, infrastructure, and is less concerned with profit. So that's the first difference between budgeting in the private sector and public sector. The purpose of a budget is to help maximize profit in the private sector and to enhance service delivery in the public sector. Now, the second distinction is based on the nature of the budget. Nature of the budget. Now, the legal and operational nature of the final budget varies significantly. For example, in the private sector, the budget is an inter-financial plan. It is an internal financial plan that management uses for planning and performance appraisal. It generally highlights the internal aspects of an organization. It is highly flexible, which allows managers to adjust and flex the budget to match unexpected changes in the environment. The changes could be in the sales volume or even market conditions. The budget, I repeat, in the private sector is an internal financial plan. It is an internal financial plan. Whereas in the public sector, a budget in the public sector is a legal document. Some of you, I know you've studied the Public Finance Act. Okay, it's a legal document that grants authority to spend public funds, and it is typically highly rigid. This one is very flexible. The management can change as the changes in the environment. But for a public budget, it is very highly rigid, as changes often require lengthy bureaucratic and sometimes legislative approval. And the focus of control is strictly on adherence to the voted funds. And that happens in order to prevent overspending. So nature of the budget is another line of distinction. 3, another distinction could be based on revenue and accountability. Revenue and accountability. Revenue and accountability. Now, the source of money and who the organization is answerable to dictate the budgeting process. For example, in the private sector, revenue comes from the sale of goods or services, which is market driven. And accountability is to shareholders and owners and creditors, with success measured by profitability and growth. But in the case of public sector, revenue primarily comes from taxes, from fees, from borrowing, which are non-market driven. And accountability is to the citizens, accountability is to the taxpayers and legislative bodies, with success measured by the effective delivery of services, of the mandated public services within the approved financial limits. So that's another distinction, revenue and accountability. In the private sector, revenue within the budget is derived from sale of goods and services. Revenue in the public sector budgets is from taxes, fees, and borrowing. Accountability in the private sector is towards the owners and shareholders and creditors. Accountability in the public sector is to the citizens and the taxpayers. That's the third. Distinction number 4 is on the basis of source of revenue. Source of revenue. I've just stated the primary source of revenue in the private sector is sale of goods or services, but for public sector is primarily from taxes, fees, and borrowing. Then 5, we have flexibility. Private sector budgeting is highly flexible. The management can adjust and flex budgets internally to respond to market changes, whereas in the public sector, the budgets are highly rigid because changes often require lengthy legislative approval. Then the 6th distinction is on the basis of success. Success. How is success measured? The measure of success. Now, in the private sector, it could be favorable profit or return on variances, return on investment variances. In the private sector, success is measured. Private sector, success is measured through favorable profit and return on investment. Okay, favorable profit or favorable return on investment variances. If the return on investment variances are favorable, then we say the budget is a success. But in the public sector budgeting, how is success measured? Success is measured through the delivery of mandated services within the approved budget limits. And that's all, candidates. These are 6 distinctions between budgeting in the private and public sectors. Bye-bye.